a taper of $1 billion a week. Nothing changed for the PEPP. Obviously, rates were left unchanged from the ECB. Miss Lagarde is about to start her press conference as well now, so maybe something new there, but very, very unlikely. She's likely to maintain the sort of very accommodative policy and the outlook sort of curtailed. So usual setup with our live broadcast here on Facebook and YouTube. Anything you want to have a look at in particular, please let me know. Stick it in the chat box and we'll have a look at it together. Obviously, perhaps chart of the day is the euro dollar, but it's really not doing very much at all. So let's have a quick look at euro dollar here on the 1 hour time frame. Not a lot going on at all here. Tuesday we went to this 120.75 level, which is just below or just above today's R2 level here, this red line here, 120.75. That sits at 120.70 today's R2. But as you can see today, nothing of particular excitement for intraday traders. We're really oscillating between the pivot down here, today's pivot point at 120.25, and R1 set up here at 120.52, just above 120.50. So, as I say, not a great deal of action on the euro dollar really today. We've sort of trekked higher or trended higher. We're over 120. That's the key level. Let's just bring that back in again. So we're back over 120. We broke here on Monday, Tuesday, Wednesday, Thursday. We're over there. 200-hour moving average sits there at S2. So some clear support levels for the euro intraday and this week. And we're sort of trekking higher. Say nothing of any particular surprise from the ECB this in the last hour or so. Again, Miss Lagarde might have something to say that will move markets, but it doesn't look like it at the moment. Okay, so that's all good. So as I say, any questions you want to have a look at, any particular assets you want to have a look at, anything you want to talk about, please let me know. So I say euro generally sort of in an oscillation move. We've generally got a weaker dollar. We've had a weaker yield, which has been driving things at 155, the 10-year yield. Michael's asking what's happening about cable, what's happening about the pound dollar. Well, pound recently has sort of weakened quite significantly. We went to let me just find the pound chart, here we are. We went to 140 here on, we rallied Monday. Tuesday, we went over this 140 level again. So dollar was weakening, as we've just seen against the euro. Wednesday, we've lipped down, and here we are, 100 odd pips lower, right into the 200-hour moving average here. As you can see here, Michael, we haven't been under that. And from last week here, Friday, what we're talking about, Friday here, we were under that 200 period moving average and the 20 period moving average on the 1 hour time frame. So we've got a weaker, a weakening dollar. A weakening pound. There's lots of political things spinning around in the UK that may have underplayed the sterling as well. We've had some comments about some tweets between Prime Minister Johnson and a key supporter, a key industrialist, Mr. Dyson, about fixing things. That's not played very well sentiment-wise in the UK. So sterling down. Really, we haven't had any data. Obviously, the key data we're waiting on today that drive either of these pairs is about to come out now. I was just broken. So let's have a check on the US data that's coming out. We got the Chicago National Activity Index, but more importantly, we got the weekly initial claims. Remember last week we had a big move down. We went to 576,000 from way over 700,000. Remember 700,000 was that key line in the sand that we hadn't been below since November. So it's the pandemic weekly low, 712,000. We broke that quite significantly last week at 568,000. This week we're supposed to, our consensus is around 712, 717,000 for the initial claims. And for some reason, the data hasn't updated on my workstation here. Hang on a minute, let's have a look. So again, it's better than expected. We're back at 547 for the weekly claim. So that's a strong number again, or better number again. So we've come through the Easter hiccup and the spring break hiccup. So these are obviously claims going down. Last week was revised down. It was revised up to, but only 10,000 up to 586,000 for 576,000. That's again a positive number. The Chicago Fed number, the activity index run to 1.71. That's much better than expected as well. So that's a positive number. The 4-weekly average now is down to 650,000. Well, so that's another positive tick from the jobs unemployment point of view. So the big number, that big we saw in the NFP last month, is sort of starting to feed through on these weekly claims numbers as well. So that's another positive number. So that should be dollar positive from a data point of view. So let's have a look how that's playing out in the chart. So yeah, dollar pick it up. It hasn't really moved much on that. My chart isn't moving very much here. Staying out the 15. Yeah, so this is the 15 minute. So again, it's dollar positive. Here, cables continuing to unwind. Right, we've got some questions coming through now as well. Good afternoon, everyone. Emma, Arun, Abani, my friend. So basically, to answer your question, Michael, the pound dollar is trending down. So here, this is the 15 minute. 1 hour, you can see we sort of consolidating and broken out here this morning under 139, moving down at the 200-hour support, and then the big support is the next big round number down all the way down here at 138. But today we've got S2. If the 200-hour breaks, S2 is the next support 138.55, and then exceptionally, if we get that low, 138.25 for S3 today. So cable moving lower. Good afternoon, Mubarak. Good afternoon. Hope you're well. Euro dollar trend, please. When will it come down? Any idea? Says Arun. Well, it's as we just looked at it. As far as today is concerned, where's my euro gone? Euro's disappeared. As far as today's concerned, it's sort of stuck between the pivot point support here at 120.25 and R1 resistance there at 120.50. So we've got a 25 pip zone that we're moving in today. So Miss Lagarde hasn't said anything. She obviously started talking. She's not really moving the euro dollar anyway, particularly because we've had strong US data from the claims point of view. So that's not moving. What you say? When will it come down? Well, it's it's trending higher. This is the daily time frame, Aaron. We're over the 200 day, all the way down here at 119. So that's the key level. But we're over the big psychological 120 as well. So the trend remains set. And here, as an end of day trader, you've been long from the 4th or 6th of April. So it's trending in. We're in the third week towards the third week of April here, so it may cool off next week. But at the moment, we're over 120. We're moving higher. Some profits might get bagged, but next big line in the sand is 121, where R3 sits today. So the trend remains to the upside, my friend. Which currency pair is this? This is the euro, below. If there's anything you want to talk about below, anything you want to have a look at in particular, please let me know. Good afternoon, Clifford. Hope you're well. Now then, somebody's asking here, what's the right time to buy USD pound or sell? There isn't. I think you asked this sort of question before. I think, Naomi. There isn't a right or a wrong time. You trade the time frame that fits your personality. So this is a good example. Let's go back to the pound. You're talking about the pound. Again, it depends on what sort of trader you are. If you're a trend following trader, here on the 1 hour time frame, this has been moving up, hasn't it? So we've followed that trend up all the way to 140 earlier in the week. It moved down from that, went sideways here yesterday, then moved down today. So depending on your rules and your setup, it's all about the time frame you trade, and how many pips you want to make, how many pips you want to risk. All about risk management, Naomi. So here on the 1 hour time frame, using this particular setup, the one you see on the chart here, this is a crossing EMA strategy, all about a trend following technique. So that would have, you wouldn't have been in or out here yesterday. It was up and down, looked like it was going down, didn't happen, went against you. It didn't, very small stop losses on there. The move, really, the first significant move was here this morning, this afternoon, this morning, 11 o'clock candle here for a 1 hour trade. It's broken out of that range. It's closed under the key 139, and then it started to move down. Went against you a bit, but that's now trending low. So initially, your stop loss would have been up here somewhere around the turn, 139.45 area, and then you've just trailed your stop loss down Obviously, first resistance is this key 200-hour, so you perhaps expect a bit of resistance there, which we had. And then if we get to S2, but we're still trending down, you're still lower now. So again, Naomi, all about your time frame. Euro dollar won't come down this week. Well, as I say, as we just had a look at Bello, it's still trending high. Anything's possible. You know, this was the major and news announcement the Euro traders were looking for today that would have chopped things. Remember what happened yesterday with the Bank of Canada? We had that big shock where they did implement some reducing of their bond purchase, so the taper tantrum, call it what you will. But here for Euro traders, Bello, the trend is up. It looks like it may be stalling around here because we've had two in different days, but that's not such a surprise because the major news, the major risk event was the ECB announcement. It's become a bit of a non-event, so we're sort of following through here. So see these two doji candles, not much movement on Tuesday and yesterday, Wednesday, Thursday. We got a bit of a bigger candle. We had this big break on Monday, so we're just consolidating that break over the psychological 120. 120 for euro dollar is a big line in the sand. So we breached that, and we breached it significantly on Monday. We've held it Tuesday, Wednesday, and we're still moving up. So next resistance is that 120.75, the high we got on Tuesday, and then above that is 121 and R3. Okay. Moses, gold. Gold is holding its bid. It's had a really good or relatively good April. It held that key. This is gold on the daily time frame. So the 20-day moving average played out really well here. First day of April, it triggered higher. Bit of a weak start because we wanted to break over 1745, this resistance we'd had here. And we did for one day. I think it was about a couple of weeks ago, wasn't it? It was a Thursday, wasn't it? I seem to remember, 8th here. Then we dipped down. We went as high as 1758. Then we dipped down. But more importantly, here, as an end-of-day trader, you can see that the 20-day moving average held. We didn't close underneath it. So we breached it here on the first trading day of the month. And then ever since, it's held as our support. So tested there 1, 2, 3, 4, 5 days in a row. We tested the 20-day moving average. It didn't want to break, and then we broke higher here over that 1758, over the 50-day moving average, which is this blue line here. I don't know if you can see that. The blue line here on this day here, I've highlighted. This is the 15th, 2 weeks after the breakup. And then we've moved higher, and now we've been testing the next big resistance, which is the 200-day moving average here at 1790, and just $10 above that. But remember, that's $10. It's an awful lot of pips. Remember, 1 cent is 1 pip when you're trading gold. 1800, another big round number. Sort of got to test it yesterday. Come down a bit today, but it's still bid. So again, on this strategy here, end of day traders would have gone long here on the 1st of April at whatever that is, 1729, 1730, say, and they're well into the pips. They're 660 odd dollars to the good, and it's still moving high. So if we break and hold the 200-day moving average, it's continuing to move up. If we don't, it's a big thick wall. Remember, the 200-day moving average is 10 times thicker psychologically and metaphorically than the 20-day moving average, which is provided our support down here. But can we get through it? Well, time will tell. We're currently trading at 1788. So gold, Moses, moves to the upside. If you're interested in intraday, what's happening in intraday? Well, we've moved up yesterday. We triggered a bit lower today, a bit of a weak break there. But there we got the there you can see the 5 and the 9 crossing. Didn't break the 20. Didn't break the 20 then, and you've gone short there on this particular setup this morning at 11 o'clock, and it's continued to unwind. Next, through the pivot point, which is quite significant, and then S1 sits down there at 1780. But before that, we need to break the 50-hour moving average, which we've tested once, twice, and 3 times now. It seems to have bounced off that at the moment. So short from 11 o'clock, still trending lower, but 50-hour is our support at 1785, and then S1 at 1780 intraday, Moses. Ebony, good morning. Hope things are improving in the Caribbean and that ash is disappearing and all those poor people in Soufri are, getting some sort of support that they desperately need. Jitendra, I've just talked about the gold trend. I hope you were here for that. Albert, can I still make profit on the micro deposit account I'm new here. Albert, watch my webinar called How to Improve Your Trading Mindset, because this business is all about you. It's all about understanding yourself. People can make profits and make losses day in, day out, but you've got to understand yourself. That's the first principle of being a successful, or understand yourself as a trader. So any account, whether it's micro, macro, whatever lot size you're trading, but you've got to understand the basics. If you're new, Albert, start with a demo account, understand yourself, make sure you understand leverage, margin, the spread, the asset that you're trading, because each asset, whether it's you're trading a forex pair or a commodity or a stock, all have their different requirements with regard to margin. Understand the leverage on your account as well, how that works, and understand the capital in your account and how that works as well. Can I see Facebook requests? Somebody's just said, yes, I can, but I haven't actually checked them. So sorry, if you're on Facebook and you follow me, they don't pop up here on the stream. I need to go to a different page. So just bear with me a second and I will find you. So where am I? Let me just refresh that. So as I say, good jobs news from the US, non-market moving news from the ECB. Miss Lagarde, I don't know, I haven't got her up on my screens over there. Miss Lagarde might have something to say to change that, but at the moment it doesn't look like it. Euro is stuck between its let me have a look. Between its it's just I name myself. That's not good, is it? Right, yeah, my microphone had gone on mute, so I apologise about that, guys. Cooper, are you here as well on YouTube? Right, so let's. We did Euro Swiss, Euro New Zealand. There was the next two I was going to come to. So there we go. Oh, hang on a minute. What was that? I can't hear myself in. I hear myself in echo here. That's no good, is it? Let me just. There we are. Very strange. I didn't hear myself. Sound is off. Right, my sound is back on. Sorry, guys. I don't know how that's happened. I must put my elbow on my mute button. Is anybody left? Yeah, Tradio, absolutely, Paul. Paul's put Tradio. Tradio is a good place to start as well. It's a good teaching site as well. Right, audio's back. Right, where were we? Euro Swiss and Euro New Zealand. Let's have a look. Euro Swiss. Let's have a look at the Euro charts. Euro Swiss on the daily time frame here. So nothing's really changed there on the daily chart. You can see we're sort of angling lower. We're pivoting through one. So Euro Swiss, big psychological 110 is where we're pivoting through at the moment. That's the big yellow line here. Cooper, which I'm sure you're well aware of. But again, it's sort of angling lower, but doesn't really want to. The highs are getting lower. The lows did get lower, but we bounced off the 50-day moving average here in the middle of the month. Okay, it's not one that particularly moves around a lot. Euro Swiss. It's not the most exciting pair to trade, but it oscillates quite nicely as well. So it's angling bias lower. But today we're playing with the 20-day moving average. We've got support at the 50-day moving average. Resistance here at 110.36, which is the 20-day moving average, and we're just above that currently today. 4 hour being a bit similar, yeah, just oscillating sideways, no particular trend on that. So support here, 110 itself, and the 1 hour got a bit of a lift from the ECB a bit. So we're into the S1 today, over the pivot point, and R1 next resistance today is there at 110.50. But again, not one to get that's really moving around a lot, Cooper, to be honest. So I can't get too excited about that. Euro New Zealand, on the other hand, has been moving down, but again, another one that's sort of chopping around. Nice W shape, a zigzag formation there. So 166 has been the support. In fact, it's a bit higher than that, 167, I'd say, through that. Yeah, 166.82 proved support here on the 4 hour time. I've got the wrong time frame on the daily. But also it's same sort of support there on the daily. You can see that 166.80 zone is a big fat support. The 50-day we're over again, so it's having a strong day euro here against the Kiwi. But sort of again, sort of choppy. It's not really directional. We've got the 200 day up there. We've got the 20-day above the 50-day, and we've got the 50-day below the 20-day. So it's a bit messy. So going forward, that support there at 166.85, we need to break and hold this 50-day moving average. I hope you can see that 50-day moving average today, which we haven't. We've been chopping around for a week or so, but obviously in anticipation of the ECB. Then we need to break back into the top half of the Bollinger Bands or over the 20-day moving average there at 168. And then your resistance comes through here. You need to get to 169.35 to take this higher. So over way beyond the R3 level today. So 169.35, so 169 itself to round number first, and then 35 pips to the north. So not a great deal going on there, Cooper, my friend. Yeah, for some reason I turned the audio off. Naomi, sorry, it's silly old bugger. At Copsy and Hang Seng. Brandon, yeah, did you send an email about that, or did you send something on Instagram asking about that? I think I saw that this morning, Brandon. Copsy and Hang Seng, they may come. We not. I think we've got. I'm sure we've got the Hong Kong index on our MT5 platform. Brandon, check out the MT5 platform. I'm going to get the MT4 here at the moment, but certainly, in fact, let me just double check. I'm sure the hang on, new chart. Let's have a look. Indexes. Where is it? Indexes. Indices. No, the Hang Seng isn't on there. I'm sure the Hang Sengs and the COPSI, I'm sure they're on the MT5 platform. If not, they're definitely coming if they're not on there already. Check out the futures chart as well. No, the Hang Seng's not on there. It's just the Nikkei. I'm pretty sure it's on the MT5. If not, Brandon, send an email into support@hotforex.com or even send it into webinars@hotforex.com. So we're always adding products. If the Hang Seng and the COPSI is something you want to trade, let us know and we'll have a look at it. Ebony, pound Aussie. Let's have a look at the pound Aussie. Where we are with the pound Aussie. Pound Aussie on the daily time frame. Again, another one that's chopping around a lot. Top here in April has been 181.62 for 3 days. Now we've moved down quite aggressively through 180 itself, through 179, and then we found support here at 177.40, and then bounced up. And again, another one that's not from a trend following point perspective. Ebony, that's not doing very much. Again, we've got mixed up, unaligned moving averages. What do I mean by unaligned? Well, as you can see, hopefully you can see the Bollinger Bands are sort of trekking a bit higher, and we've got a bit of nipping in of the squeezing of the Bollinger Bands. But we've broken out. So we've broken out here. We went lower here. The 8th of April, ran down into 177.85, and we bounced off it, but we can't really hold the midpoint of the Bollinger Band. So we're literally, zoom this in a bit, we're sort of sliding sideways again. So at the moment, and this is an end of day basis, we've got resistance to going higher because we've got the 200-day moving average there at 180.64. Those little dots there are the parabolic SAR, and it's still trending down. We bounced off this level, ran into the 200-day, and then rejected it. We are now, technically today, obviously can't make a decision on today's candle, but it's weak again. We had a big weak day yesterday. We went, having rejected the 200-day the day before. Yesterday, Wednesday, so rejected it Tuesday. Yesterday, rejected it again and closed under the 20-day moving average and the 50-day moving average. So again, that was a weak close, but we were in this at this support level here, this 179.40 level, which is on here for some reason. I think it's a 4-hour support area, but we're under that as well. So 179.15 and then 178.75 are the two key support levels below here. And then the big support level is obviously this low that we got to intraday at 177.40, but the end of day we close at 177.75. So again, that's sort of trekking or trending lower pound Oz. As far as intraday is concerned, so that's the daily, having rejected these big levels. 4-hour will be showing those levels as well. So again, we're under this key 4-hour support level there at 179.40. We just mentioned it was the 4-hour area. Again, compressed moving averages there. So we've moved up and then trending lower. So the 4 hours trending lower needs to break the S1 level at 179.13 there. And then the 1 hour, again, moved up off the 200 hour and into the pivot point, and then down through the 50 and the 200 hour, through that key level there and into S1. So really, again, another one that's pivoting between the pivot point and S1. So we've tested S1, bounced off it so far, and it may move back up. But again, another one intraday that's been under its 20-hour moving average from this morning at 10 o'clock, where it went low. As you can see, the MACD has been under its zero line all day from the break, moved lower yesterday. So we've moved into the 200 hour, moved off the 200 hour, bounced into the pivot point, moved back through the 200 hour, then it's gone weaker, which you might expect. Broke that previous support on the 4 hour and then moved lower into S1. So it's still trending lower from this break of the 20-hour moving average this morning. And a break of S1 could then bring in S2, but so far that's holding intraday for the pound against the Australian dollar. Ebony, I was on Facebook, your audio, and then came back on to tell you. Can I get oil, says Cooper. Yeah, Cooper, I certainly can. Sorry about the audio. It was me trying to turn off the audio, I could hear myself on Facebook. So oil for Cooper yesterday, $60 has held for US oil. Where's my commodities? Actually, let's go back to the intraday stuff. We went to $64 this week, but we've rolled over quite significantly. But $60 itself is holding Cooper on the oil market. I didn't actually see the inventories yesterday. Actually, I forgot to check that. But this is US oil on the end of day basis. So you see here, the big blue line here is the $60 level, and we sort of been really pivoting through that from the end of March. But looks like we've broken high. So this downtrend here from the beginning of March to the end of March has sort of broken out. It's certainly broken out quite strongly here on the 14th when we went to 64, our first break up of $60. And then we tested as high as 64. It's not actually on here. Put the $64 level on there. We did test $64 this week here. And then we've moved down. So the support is that 20-day moving average, which sits at 60.80. But again, with oil, it's these, again, more so than many others, but big round numbers are key. So for me, really, $60 break will take us lower to this 57.25 level. $60 holds, and we couldn't move and retest $64. We've been weighed. The oil price is benefiting from a weaker dollar, but oil is also driven by global expectations, and obviously the spikes and the clusters of the virus still in places like India, which had 314,000 new cases today. The vaccine rollout still sort of dragging in the EU. They've got some more vaccines, so it may look to pick up in the EU. And Japan, potentially Osaka and Tokyo going into lockdown, also with slow vaccine rollouts. So that's still an issue. Markets have priced out that, equity markets at all-time highs. Vaccine rollout going very well in places like UK and the US, but the virus itself is still quite prevalent prevalent in some key economies as well, particularly the middle income developing markets like India and Brazil. So key issues in Latin America as well with the virus. So that's hanging on global growth, global development. Therefore, that will hang on the oil price. But so long as we hold $60 a barrel, that's a key significant level. So $60 support, 64, the high we got to this week to move higher. Cooper, let's go back to Facebook, see if anybody's still there, even though the audio went off. Please, how can I be full-time? Cable, nice, short. I don't know what time frame you're on. There. Report to Aladdin, Andrea. I don't know what you're talking about there. I've missed you. Please, Aladdin. Oh, I see. Okay. Right. Where were we? Who did we get up to? Cooper. Looks like a Head and Shoulders. Maybe. Possibly. It's maybe. Don't try Cooper. And again, it's for everybody. If you see it, if you can see that you identify a Head and Shoulders. Obviously, there's rules about these patterns, but if you get a feel for a pattern forming, you know how successful trading after a Head and Shoulders or potential Head and Shoulders setup. But as with all these setups, all these patterns, they don't work all the time, obviously. But if the ones that you see, you can see with your mind's eye sometimes ahead of the actual pattern forming. Obviously, it's all about risk management. This business, getting some people have an instinct about patterns forming and plotting before they do. Others have to wait till they're complete. I'm that former type. I've got to be confident that things have happened and confirmation. So that's why I have the 3 moving averages on here. The 5, the 9, and the 20 before I trigger anything. Others, I just shorter time frames, just waiting for a bounce, waiting for a touch of a particular level rather than a break of it and a hold of it. So it's all about what works for you, Cooper. If you see a Head and Shoulders forming, all well and good, but you can see what you're talking about here. Shoulder here, head here, potential shoulder here, head here again. So we'll see. But again, for me, it's horizontal level, $60 on oil. Key. We've had a the other thing as well, obviously, we've had a really, really good run on the oil market. I'll take this to the weekly and zoom it out a bit. Obviously, a really, really strong run, certainly from November. Obviously, this time last year, remember, it was this time, it was, in fact, it was a Thursday, wasn't it, when the futures market went peaked on complete, went negative here on our CFD chart here. The lowest we registered here on the CFD was $6 a barrel. The futures contract actually went negative. It's crazy. Was that what day was that? 19th of April, that is, not the... so where are we? A couple of days ago to the year. But here we are, all the way at we went within 4 cents of $68. So very, very strong rally. A bit of a cool with regard to profit take, but you can see on the weekly chart, big support there at 57.25. That's that daily level we mentioned. That's where the 200-week moving average is for oil. So as far as an end of day basis, $60 the kilo in the sand. I'd be looking at Cooper, my friend. Saudi, good afternoon. Hope you're well. Anything you want to have a look at? Any particular asset? Any particular time frame? Let me know, and we'll have a look at it together. So where am I? Back to Facebook. There's no more questions here because the audio went off. Muzzy, I got the gold. Hopefully you got the gold. Let's have a look. So let's have a look at Euro, see if we've had any more movement. I haven't been monitoring Miss Lagarde's press conference. So Euro has broken out here post Miss Lagarde. So we've broken out of the R1 level, chopping around. Looked like it was going to go positive there, relatively positive there at 1 o'clock, but obviously you wouldn't be trading it on. Certainly on this strategy, you wouldn't have taken anything ahead of the main ECB announcement and post ahead of Miss Lagarde speaking. So we've had a rally over R1, stalled at R2 at 120.70. Remember that 120.75 was the key resistance level from earlier in the week, and we're back down again. But again, generally, we're sort of biased to the upside, even though we've had strong US data, as I mentioned earlier. Those that might be just joining us, US unemployment claims this week is much better than expected. It came in at 547,000 as opposed to the 617,000 as expected. And last week's was rolled up, but it wasn't rolled up as much as we thought, from 586,000. So remember that big line in the sand for the unemployment claims was the 700,000 resistance. We broke it last week quite significantly, and we've maintained the break this week, and we're under it quite well as well. And the four-weekly average is also down at the big psychological 650,000 as well. So good news on the job front on the weekly claims. Finally, consistent, 2 weeks in a row now. So that's looking positive. Again, I can't see the details or what the composition of these new claims are. Whether much like the detail was in the NFP, was the hospitality jobs coming back. Big, strong NFP this month, remember, as well. That wasn't being sustained from the weekly unemployment claims, but that looks like that's now feeding through after the Easter and the spring break sort of hiccups to the data you get in those US data. So positive unemployment data. So look, running now, but news didn't have so much an impact like CAD news. The CAD news yesterday was because of the news. It was a significant surprise. The cut in the bond purchase. It went from down to 3 billion a week from 4 billion. So it was a big cut. It was a 25% cut in percentage terms. So that's why the dollar CAD moved like it did, and all the CAD pairs. So you see that yesterday. That is a market moving impact. Oh, you're saying not like, I guess you mean not like the CAD news. So that was the big surprise yesterday. From 126.30 zone before the announcement, we went all the way down to test 125 and broke it very aggressively. And we're just now finding our new level here at 125 for dollar CAD. So big old move yesterday. So euro, it seems to be moving, but nothing like we had, as you say, nothing like the CAD news yesterday, Subham. Right, if interest rates rise, should I go short against the dollar? Wise Ninja, interesting handle there, my friend. Interest rates, all the central banks are not talking about increasing interest rates, and that's priced in. for a number of years, not only just this year but certainly next year. There may, markets may be, thinking that the Fed in particular may have to act before then if we get this sustained spike in inflation. But again, earlier this week, Jay Powell, in a note to a congressman that was released. Actually, somebody asked about dollar index. I forgot to look at the dollar index, so apologies to whoever asked about the dollar index. We'll look at it in a minute. To a congressman about he's comfortable. Or this is coming from him personally, not from the Fed, but he's comfortable. And remember, he's the chair, so he has the casting vote if he needs to. He's comfortable with a spike in inflation. He's expecting a spike in inflation, as is everybody, as is the market. What the inflation worries are that it's going to be sustained, sticky type inflation, stuff that goes up doesn't come down. There was a report this morning I was looking at in Reuters and Bloomberg about second-hand car values in the US have spiked 7% in the first 2 weeks of April. So that's a sticky sort of inflation, but that's a big jump. But they had been, they've got very, very low. So is it really going to feed through to sustain these prices? Maybe. Remember they've chucked 1.9 trillion in the stimulus bill at the US economy, and there's 2.25 trillion in the back pocket if the infrastructure budget gets pushed through. So that's why everybody's talking about inflation going through. But the counter argument is it real inflation? Is it sustainable? And I say, going back to Jay Powell, he's saying he's expecting it to spike up, but it's not going to. It's going to come back down as well. We'll still see what goes. As far as rising interest rates, it doesn't look like that's going to happen anytime soon, Ninja, my friend. Cutting bond purchases means more liquidity in remaining markets. That's why CAD became strong. It was the surprise, basically. Yes, it means that they're hawkish, which means that cutting bond purchases means they're a bit more confident in the Canadian economy going forward. Cutting bond purchases actually reduces liquidity rather than increases liquidity, but it means they're more hawkish on the Canadian. Let's just go back to the Canadian dollar because that's the one you're talking about, which is why we got this big. So that's the intraday. So this big movement. If you go to the daily candle, you see it being sort of chopping around, but it's the trend over this. This is what November is generally to the downside. The bias is to the downside. You see these highs are getting lower, and again the lows getting lower. It went sideways here for most of March, and so far most of April. But 125 is a key level again, key psychological level, but bias to the low side. So CAD's been sort of beating the dollar, not particularly up, but stronger. So it was a surprise factor more than anything. That's what markets hate. Markets are pricing not much change from the Bank of Canada. They cut quite aggressively at 25% cut. So it lifted the Canadian dollar. So they were more hawkish than the market was expecting, which is why we had that move. Sorry if I meant, if you're interested, is it good to short against some more positive jobs news in the US? Why is it? It's the jobs news, this unemployment data isn't as significant as anything the ECB might announce. So remember, when you're looking at your news flow, look at the impact level. Look at the red big high impact events are the ones that are really going to move things. The jobs number is something I keep watching, and it's a medium impact event. But it's quite it was a relatively significant one today because it was the second week we've been under these key levels. So it's all adding to the news, the positive news flow, which we're getting out of the US at the moment as well. And the other thing to remember as well, guys, is that markets are always forward-looking. So a lot of the news is already priced in. Sorry, you can't see me, can you? A lot of the news is already priced in, unless it surprises, like we had with the Bank of Canada yesterday. Trading those two events today hasn't, as I say, it wasn't really moving. It did move, and then here we are with reverse quite aggressively as well. Sorry, let me get rid of. Put me down there. You can see there's the euro. So, the choppiness, the noise of the intraday movement, we're back to the pivot point where we were this morning. So, big move down now in this hour, reacting to perhaps some of perhaps said something, I don't know. Perhaps Mr. Garda says something very significant. I would guess she stopped talking now. Where are we? This is the current hour. So I guess she stopped talking now. The hour's up. She might have said something significant that's moved that. It may be some other US data. I don't know. I haven't really got. Say Mr. Lagarde talked about the vaccine underpinning things, but largely the same as they were in March. Nothing really that's moved the euro and that extent. It might be just the market makers playing with levels, but it might have got to some key levels. People have had enough of that little rally, nothing to get sustained about, so they've had a move off the pivot point at 120.25. Had 30 odd pips. Thanks very much, and off we go. Back down to the pivot there, 120.25. So I say nothing particularly newsworthy in anything we've got, but yeah, Chen, euro suddenly turned lower. Certainly, it's on the hour. You can see it's choppy. If you go down to the lower time frames, a bit more excitement. So we moved up quite aggressively, and it's turned around really aggressively as well. So yeah, again, really got much to say on that, my friend. Wise news, thanks. Wise, thank you, my friend. What's Chen saying here? Chen says euro will go to 1965. Will euro go to 1960? I don't know what time frame, Chen. It will do at some point. I know it sounds a bit flippant, but I don't know what time frame we're talking about. Where's the night? Let's have a look. What you say? 1965. 1965 is around about here. I've got 1962 on here for some reason, Chen, which is where I've got the 200-day moving average at around 1914, 1962, maybe a 4-hour level. I don't know why that's in there. I feel like why is 1962 in there? It was a it was a channel by the looks of things. 1962 is one I've got on here. 1965, yeah, it was a resistance on the 4-hour time frame as we were moving up earlier in April. So yeah, but it certainly possibly can go to 19. Hang on a minute, that's the wrong one, isn't it? That's 1926. Sorry, I'm talking about the wrong number. I'm looking at that incorrectly. Let me put your level on, why you've got that level. First, where have you got that level from, Chen? Is it a particular 19? Let's have a look. 19. A particular chart time. Let's make it blue so we can see it together, shall we? There we go, blue. Let's leave it. We'll leave it a thick one, okay. So what's that level? So Chen said euro could go to 1965. Well, it certainly could. It's the S3 today. That the S3 level is only traded to on a daily basis. These are the extremes from the previous day's action. On about 5 or 6% of the time. So it's unlikely. It's not unlikely, but it's we're above the pivot point, so it needs to go down quite significantly to get to that today. But certainly, it's yes, I see where you got that level from. It's from the big break up when we went through 120 on one day. So if 120 breaks, certainly that would be a key sort of support zone. But before that happens, we need to break 120. We then need to break the 50-day moving average, which is coming up to support. So we got 120 as support, then 119.80, which is 119.85. So 20 pips above your 1965, Chen, and then really that 1965 level. So I'll see where you got that from. Certainly on this is the 4-hour basis. On the daily basis, it's the 50-day moving average. So yeah, 1965 is a key level support, Chen, absolutely, to the downside. Subham, can you explain how bond purchases and selling affect that currency? Right, let me explain. Right, do we all understand what bonds are? Bonds, remember, are what companies, people, individual investors, big investors invest in a country. So country and big corporations invest things called bonds. So instead of buying a company's risky or more risky share, you can actually buy a bond in the company. And with a bond, whether it's a corporate bond or a government bond, you're guaranteed the return. So the return, because it's guaranteed, tends to be very, very small. But the bonds, the yields on those bonds can be or are traded. Okay, you get a coupon, as they say, and you get interest paid every 6 months on government bonds. So if you're holding obviously long-term ones, and they vary for anything from a few weeks up to 30, 50, 100 years for some countries. So the more risky the country, obviously the higher the yield, because they've got to pay a high yield to get people to invest in the country. So somewhere like the United States, which is the world's biggest economy still, and will be for a while yet, and the most stable political situation, regardless of what we might think politically, very stable, very open political democracy. So it's people want to invest in the United States. So when things get a bit what's the word? When things get and people invest in bonds because they want a guaranteed return, a little bit of risk but a guaranteed return. So it's a big market, the fixed income market, as it's called. So when things tend to get a bit more comfortable, or people want to take more risk, bond prices tend to go down, and the yield goes up. So the yield on a bond and the price of a bond are inversely correlated. So as the price goes up, the yield goes down, and as the yield goes up, the price goes down conversely. Okay, so by the Bank of Canada reducing the amount of bonds they're purchasing, that suggests that they're a bit more comfortable with the expansion or the growth of the Canadian economy. So therefore, they're reducing they're taking on more risk by reducing the amount of bonds. Okay, so that tends to be hawkish and tends to be good for the economy and good for the currency, which is why, in very simple terms, Subal, that made sense. The Canadian dollar yesterday rallied so much when the Bank of Canada decided to cut the amount of bonds they were purchasing, surprisingly. And it was more to do with the surprise, Sumba, than the actual event, although the event was quite significant because it was 25% cut. So anyway, Chen saying Euro will now go to 120. Well, quite possibly. It's a big, big cycle. Remember, the thing about that, Sumba, is that we broke it. As you can see here, we broke 120 very aggressively last week. Oh, sorry, on Monday, wasn't it? It was only Monday. It was this week. Seems a long time ago now. But we broke it very aggressively here early on Monday morning. So Monday we broke through it. We rallied up to Tuesday, the next day high to that 120.75. We then slipped down back to 120 support here Tuesday, Wednesday, ahead of the ECB. Market participants are playing, the ECB announcement. So this is, although this looks a long way, this is only 75 pips, but certainly can be quite a move. So 120 is the big, big line in the sand, and here we're having a big sell-off on this particular hour. So as you can see, the move up through that significant level. Still not as big as today's move, but obviously that candle still got another half hour to complete. So we'll see what it looks like in half an hour. Mohammed, good afternoon. Right, I'm going to wrap this up. I've been here an hour. If there's no more questions, my voice is going. Everybody's given up on me on Facebook. The audio went off. Let me just check. Is there any more questions on Facebook? No, there isn't. 20 minutes ago. Nope. Let's go back. So let's have a quick recap of where we are. So Euro ECB day, not a really. I don't know. There's a bit of. I you see a lot of action there, but not. It's held at the pivot point. We got to R1. Looked like we were moving up. Now we've reversed all of that in this hour as well. So it's moved around quite a bit. Right, Super saying you didn't understand it. I didn't understand that much. I thought when government sees too much liquidity in market, they buy bonds. But liquidity, that's a key comment. Liquidity is all about the amount of cash in the market, if you like, and bond purchases just generates more liquidity as well. So reducing the amount they're buying actually reduces liquidity to an extent. Okay, Suma. Send me an email. I can explain more when I write stuff down. Okay. I hope that didn't make sense. Mohammed, good afternoon. The thing about bonds, Suma, a lot of people just ignore them, but it's a relatively small market compared to like the forex market and perhaps the equity markets, but it's very, very significant part of the market. So be aware of the amount of from a bond point of view, but the amount of liquidity they generate is when the amount that the governments issue. Okay, so that's where the liquidity issue comes from, and they always by buying bonds in governments, you're investing in the country and you're investing in the government as well. So it gives them, does create more liquidity and creates more money flows. Okay, so I say if you want a longer explanation, drop me an email at webinars@hopforex.com and we can communicate that way. Okay, Mohammed, good afternoon. I'm just about to wrap up, guys. Let's have a quick recap. So Euro still relatively bid. It's Chen's been saying 190, 120 is the one area to look at. We've been over it since Monday. Are we going to close the week tomorrow over 120? Key line in the sand. And I say on an end of day basis, it's still bid. We're still over our 5-period EMA. The 9-period EMA is there at 119.85, and the 20-day moving average is all the way down there at 118.85. The 50 periods there at 119.56, and the 200 is 119.94. So again, another mixed message, but it's had a strong April euro dollar. Okay, so that's all for today. Take care, everyone. Stay safe. Actually, somebody asked about dollar index, and let's just finish with dollar index, as it's probably the most important or key one. So again, we're back to these key levels. So 91 for dollar index. Let's take it to the daily time frame. So again, another great example of the weakness of the dollar during April. And again, strong March. This is the daily time frame here for the dollar index. Remember what the dollar index is. The dollar index is a weighted index of 6 key currencies traded against the dollar. So it's the euro, the the pound, the Swiss franc, the Swedish crown, and the Canadian loonie. So for March, we had a very strong dollar. We rallied up here all the way to 93.45 on this index, and then April we've just reversed most of that gain for April. So we're back to 91. It's provided support for 1, 2, 3, 4 days now. We haven't closed under 91 itself. We've traded under it intraday this week, but 91's our key support level on an end of day basis. 4-hour traders remain short as it's been trending lower into 90.81. It was earlier in the week, and that was a 7-week low down here. So 91 is key. It's the support area here for 4-hour traders, and 1-hour traders were short yesterday into 91 again. See what it's provided support, and it's chopping around it. It looks like it's moved up there, then reversed against it. So that was a losing. That stopped you out at 91. And this looks like a pretty strong hour candle now. So dollar overall is sort of biddish, if you like, from that jobs news potentially. So that's all for now. Take care, everyone. We'll see you all again next week. Now it's Thursday, isn't it? It was not a lot going on, and let's get rid of that. Bring me back up. So take care, trade carefully, and we'll see you all again next time. All the best, everyone. Bye-bye.